Okay, good evening, everyone, and welcome to tonight training. So,
Good evening,
uh,
sir.
for the someone asked question yesterday about EMA. Like, I think the person asked about my indicator I use for my chart, and I share EMA. Then it's like the person seems to be confused, but there's this way I normally use EMA, and I want you guys to get familiar with that as well. So probably by okay. Oh, let me turn it on. Let me turn it off. Sorry about that. So okay, let's quickly add. Let's start from how to add the AMA. And I want you to understand something that EMA, SMA, and MA, they are almost the same. Like in fact, I can for some traders I can say they are the same, but I think there is a little difference between those three indicators like EMA, SMA, and MA. EMA is exponential moving average, SMA is a smooth moving average, while MA is moving average itself. Some people like to use MA alone. Like if you type MA, you can see we have MA cross here. I think I'm on favorite. Okay, I'm on favorite. So there are some others there. So those one that start, they are the favorite. Those one that already have found that the favorite. But then you can see we have a moving average. If you type AMA, you will see moving average exponential. So on some app, it is called exponential moving average. That's why it is called EMA. And if you type SMA, you will see simple moving average. You can also see down here simple moving average, and you can also see down here smooth moving average. So those indicators, they are almost the same. So far you see moving average, they are almost the same, but the truth is that I can't really tell the difference between those things, except for that when you had the three indicators on your screen, they will just there's this slight different, like the distance they will have from one another, it's always different. So that is the difference I normally see about them, but aside from that I don't see anything else. And how okay, let's first of all add it, and let us add EMA. So this EMA, you can on some for some people you might be able to add it one by one if you subscribe to TradingView. So for you to have access to this advanced features on the platform. But if you don't have that, I always recommend that you go with this 20, 50, 100, and 200, like this one you are seeing over here. So just click on it, and then you will have the indicator on your screen, and you can see we have it up here already. Can you see my screen very well? You can see this 20, 50, 100 something. Hello, someone should answer me.
Yes, we can see. We can see.
Yes,
Okay,
yes,
okay.
yes,
So
yes, we can see.
okay, thank you. So now we have it now, you can see. But I always love to change the color. I don't know if you guys are seeing the color very well, but so the 20. Okay, look at this. Oh,
Sorry, where did you click? Where you want to color?
I click on this settings. It's something that you are seeing here. On this setting something.
Okay,
In fact,
yeah.
let's look into my favorite. I think there's another EMA there with better. Okay, let's. Sorry
Because
for
there
sorry.
is different. Okay,
Go ahead.
because there's a lot of EMA on Tab Trader. So I'm confused on which
See,
one to choose. There's one
I
of
have already
10, 20,
explained
50,
it.
200.
Chill, please. You are not
Okay,
following me, or maybe you just join us. Yeah,
yeah,
when
I
you
just came.
type, for some people, when you type, for some people they can add it one by one. And this is trading view, not tab
Okay,
trader. So if you are using trading view, tab trader, I mean, you have to add it one by one. But on trading view, you can add it either one by one or add all of them together in one place. So but you can, if you add it one by one, that means you are adding each indicator, and that means if you had theory, like as we have 4 in one places now, if you had 4,
Yes.
EMA, that means you have 4 indicators on your chart instead of this single one. And there's a limit to how many indicators that you can add on your account if you don't subscribe to this platform. So that is why I recommend that you go with this one with 20, 50, 100 and 200. But I want to show you something. That is why I want to remove this one right now, and I added this, which is this one you are seeing here, and the EMA DK swag. You can see the DK swag. So that's why I'm adding this one. And adding that, what is it that I want to show you? Let me first of all hide this. So I just hide it, and in this there's no 100. This is what I want to show you. Please, if you mute yourself back. So this is what I want to show you. On this now we have 200, 20 and the 50. So I always like to change the color of all those indicators, and that's 200. I always put it in white, and let me bold it a little bit for everyone to see. And the 20, I always like that in red. You can put it in any color that you like. You can try to use it, you can decide to use it the way it was, but I love to change it. So now, one thing you need to understand about this is that, so I'm just hiding the 50 and 200. Let's talk about the 20 first. The best way to get used to this thing, like to get it to understand how this EMA works, it seems a little bit, in fact every indicators, they seem more they seem psychological. In fact, the best part of trading is psychology, is to understand the psychology part of it. To be honest, the best part of trading is to understand the psychology part of it. And what do I mean by understand the psychology part of it is that there's this belief that EMA, like this EMA 20 you are looking at right now, there's this belief that it's moving, I think moving 20 days away from the candles or something like that. That part seems a little bit complex, like, you know, all this big grammar kind of. I always try to avoid it when it comes to analyzing charts or explaining things to anyone, because when you are trying to, that is one of the things that make people think trading is difficult. In fact, I know how many days, months that it takes me because of big grammar I keep seeing online. But one thing you need to understand is that there is a point the market will go above the EMA 20, and the moment it goes below it, what happened? The market started going down. It goes above it here, it goes up. It goes below it here, it goes down. And you can see all this area, it keep going up, down, up, down. Can someone tell me what is going on there? I have teach you guys about this before. Anyone?
Consolidation.
Exactly, it's consolidating. Then the moment it goes above it here, it goes up a little bit, then it crashed down again below it. That is what you want to understand about it. Then let us hide let me first of all delete this totally, then hide the EMA 20 and bring on the EMA 50. When I was explaining to that person that asked question yesterday, I said you need to study them one by one. When you study them one by one, you will understand how it works. Now look at this now. On the EMA 50, the market goes below it also. What happens next? It goes down. It goes above it, it goes up. It goes below it, goes down, up, down, up, down. It keeps doing that. And this is daily chart. Now, first thing you want to notice when you open your chart is to understand where the trend is going to, no matter which time frame you are on to. This is daily time frame, and this is uptrend. From the uptrend over here, it seems more of like consolidating, not really consolidating, but because of the way this, okay, it's even consolidating, not because of anything. This is consolidating right now over here. Although if you bring it up a little bit, you can have different shape, you know, but because we want to see the whole chart, so it's more of consolidating for us right now. So let's say this is all consolidation, and then the market goes above over here. If we draw a trend line above this area, the market go above the trend line, it also go above the EMA 250. It's a good trade if you enter this kind of trade and you keep riding it up. Then over here, it goes below it, it goes down, it go above it, it goes up, it goes. So that is it. That's how to understand it. Then now we have, but one thing you need to understand here, there is difference between this, the EMA 50 and 20. I'm going to show you that later. Then this EMA 200, it's here to come up. Okay, it's here. Look at this also. Almost the same thing, though not in the same area to the chart, but when the price go above it, it keep riding. When the price goes below it, it keep riding. Those are the kind of thing you want to notice on EMA when you are studying it one by one. Now, when you study it one by one, I said also that you need to study two indicators together. This study that I'm talking about, I have done this multiple times personally. I'm using that experience now to teach you guys about this tonight, but you can still spend your own time on it to understand it more better. It can take months, it can take weeks for you to get really the real in-depth of it, how it really works. Using the EMA 50 and 200, this is 50 and this is 200, the white and the green. So there's something called golden cross and death cross. There's a belief that when there is death cross, the market will possibly goes down more. And we have something called death cross here. What we call death cross happen over here, where we have the green, the EMA 50 cross below the EMA 200. And also notice the distance of this EMA 50 and 200. See how close the EMA 50 is close to the candles, and see the distance of EMA 200 to the candles also. So aside from using the distance to understand, to know which of the EMA is this, which EMA is this, for aside from using the distance, I also change the color to easily understand, to easily know that, oh, you don't, you don't want to force your eyes. You don't need to rent a glasses or anything for you to know what you put on your own screen. I always say this, that you need to make sure your trading chart, you get familiar with your trading chart as well as you can, so that you don't want to be stressing yourself. When did I put this one here? You don't want to find yourself in that kind of situation. So now the death cross happened over here. The market goes down, though it has been going down even before the death cross happened, but that is belief. But all those things you want to try to, even though you are trying to learn from others, you also need to use your own psychology also. That's why I said all these are more psychological. So the death cross happened over here. If you think, okay, because everybody say, because there's this belief that when death cross happen, market always goes down, you want to jump into trade here, that is going to zero, then the market will just go down a little bit more, and then it will start riding up. There is also something also called golden cross. The golden cross happen here. Then after the golden cross happen, the market goes up, goes down, goes up more, then it goes down. From here, some people will believe that we have a golden cross, the market is going to 500 million or whatever, Bitcoin is going to 500,000. We get there, but we need to relax. The same golden cross that happened there, that didn't make much move, happened over here. It happened here. Look at this, and look at how far it goes. Like from this down, that is from 8,000 up to 64,000. So you see how powerful it is. So it doesn't mean it's not working, but if you don't understand how it goes, if you don't understand how it works, you will be making mistake. Like you will be making big mistake with it. And look at this, we have death cross here too, and it goes down. We are still in it. The death cross that happened from here is what we are still battling with right now, battling with today. So that's it. The comparing, like trying to understand how EMA 250 work. That's what we just talk about there. Now I'm removing that EMA 50. I will bring on 20. Look at this. EMA 20 is more closer to the candles. 50, 200 is far away from it. We already know, since EMA 20 is more closer to the candle, that means we can actually remove it and count the candle as the EMA 20 itself. So that means whenever the price goes below EMA 20, EMA 200, that is exactly where the market will the EMA 20 will definitely cross below the EMA 200 too. When the candle goes above it, the EMA 200 too, you can see that like it's glaring. Look at this. Just the candle goes below EMA 200 here, the EMA 20 goes below it over here. That's not something that we need to talk too much about. You can see that. And look over here too. Look over here too. When the price goes below, when the candle go below it, the EMA 20 also do the same thing. So you can, but you know, when you are looking at candles, it can be confusing. You like which one should you go for? The EMA, putting the EMA there will give you a confirmation like, oh, it's happened truly. You will not need, because the candle can jump in and then jump out of EMA 200. Then the next thing you started seeing is that they are splitting away from one another. But when look, for example, over here we have the EMA 20 almost cross above the EMA 200. The candle already crossed. If you are using candle alone without the EMA 20 there, you will have entered the market thinking it's going to heaven, but it's not going to heaven. The EMA 20 did not cross, and then it started crossing downward again. They started splitting, and then the market started going down also. You can see the correlation of those EMA 20 now with 200 also. Now, removing that, let's add EMA 20 and 50. Remove 200. Remove 200. You see, what I'm trying to make you understand there, maybe if I tell you that as we move on, you will start understanding something. You can decide to put EMA 1000. You can put EMA 1. You can put EMA 20. You can put EMA 21. You can put EMA 27. But one thing I want you to understand about these EMAs is that no matter which figure you put it, if you don't understand how those ones that you already know, those ones that people normally use, if you don't understand how they work, you will meet some traders. They are the weirdest ever you ever meet. They use EMA that you have never even heard of. They can tell you they are using EMA 80 something. I saw one trader online. In fact, I learned a lot from him. I learned few things from that guy. And I don't know, the account seems strange, kind of, because he haven't been posting for quite a while. I think he bought the account. But with what I'm seeing this guy posting, he knows what he's talking about. It's kind of, I kind of think he's someone that is how will I put it? He was hiding himself making money. Then when he made the money, he now come out. He decided to come out, because I also see some other big traders collaborating with him, because it's surprising kind of. The guy was using like 4 to 6 EMAs. All the numbers on those EMA are numbers that I've never seen people using before. He also teach people, like he make some posts about how to use those EMA too. But I'm not using them because I know where it's coming from. And where it's coming from is what I'm trying to make you understand also now. So if you understand how those EMA work, in fact, you can decide to use one. You can decide to use two. Just understand the basic reason why you have it on your screen. And what is the reason? It's not for you to just enter trade. It's for you to know where the direction of the market is going to. If the market goes above it here, it started going up, it reversed from that up again and started going down. But also, you cannot trade alone with EMA. You cannot use EMA alone to enter trade if you want to really get where the market is heading to. Because over here now, what happened? Why did this thing turn around over here? There's a resistance over there. Look at this. Look at this. There's a resistance over there. The market hit the resistance and then it started reversing back downward. Can you see that? Over here. Over here. Yeah. If we base our entry alone on EMA, then there's a failure there. The market will just get there. You will think, oh, goes above all this resistance over here, special resistance over here. That goes above it, then it's going up to this level. Then the next thing is that it doesn't even reach there. It started going down. So but we'll get to that part when we get to the confirmation part. We are still talking about EMA right now. So for EMA 50 and 20, this is what I used to learn. The person that first introduced EMA to me, he introduced EMA 50 and 20 to me. And what he taught me then was that when they cross one another, I should enter trade. Like, it's so crazy. No confirmation, no anything. The guy just, boy, try, because from what he taught me then, I also built myself up from that level. When there's a cross, when they cross each other, then I should enter trade. Then most of the time when I enter the trade will goes up, hit my stop loss, then start going down. I was like, oh, what's really going on here? So what I later understand is that, in fact, you need to also add some maybe trend line, support and resistance, some other indicator, maybe RSI, MACD or so, to get confirmation. It is more than just these two alone, or adding just EMA. Or in fact, you can also remove the 20. Mostly I remove the 20 and use 50 alone. When the market started going above it, I will draw my trend line, support and resistance. If I see where the market is going to, let's analyze this area for instance. Okay, so let's say this is where the market is, and we are like, okay, we want to enter trade. What you want to do in this kind of area, the market is going above the EMA 50 already. At this point, it goes above it. If you are using the EMA 50 alone or any other indicator with it, you will want to enter this trade as long that Bitcoin is going to 30 something. Moreover, remember there is a support here where you can draw a line, and you can at the same time put at the top also. If you look back into the history, possibly this area, there's something there. Something is missing here. Okay, yeah. And actually there is. Look at that. At that exact point, this area here, this angle over here, there's something there. If the market can try, in fact, it almost break above it, but let's play along. Oh, where's my play? This thing have disappeared. I'm playing I hide some candles there, but there's no thing this thing to replay it. Okay, so you can see from this area, the market goes above it, and it started going down from there. From that point, it break below this point, which means this EMA 50 failed. The EMA 50 failed. You can see that. So it is up to you you just need to understand the movement, like the correlation of the candles with any EMA you want to use. If you understand the correlation of the candle, how they move together, how they work together, if you understand that, you will be able to know how you can judge, how you can place your judgments on whatever the market is going to do. Now let's put it this way. Sometimes I use most of the time I use 50. I think I said this yesterday, that if I want to scrap the market, I use 50 and 20. 50 and I think 10 and 10. Yeah, I said 10. Trying to choose smaller time frame. Okay. So sometimes I use 210. Sometimes I can change it to but this is 20 and 200, not 10. Sometimes I change it to 50 and 10 also. What the 10, okay, let me try and add the 10 for this training. Let me use MA. So I will need to hide the EMA now and bring on the MA. I want to show us something on that. So the MA comes with 9 and 21. Before I change anything on that, let me first of all show you this. Look at this 9 and 21. The same thing that we talk about on the EMA 50, 200 and 20. I hope it's not different from what we are seeing here. When the price goes above it, you enter trade, and they also cross between, and you can see this blue dot. The blue dot is there for something, for a purpose. That is where you want to take action. In fact, not for you to take action, but you can possibly start analyzing this area, like what is going to happen here. It's not that the market, okay, maybe I should draw my trend line, maybe I should find support and resistance. Hey, this dog is disturbing. Maybe I start preparing for whatever it is. Over here now, as this is happening right here, you can apply a trend line. If you think it will if it will go up or if it will go down, I think this. If it will go up or down, but then it kicked downward. It have been doing ups and downs and down. If you pay too much attention to this cross that you are seeing here, you'll be distracted. If you need to know where the direction of the market is going to. The market direction is going down. I mean, it was going down, and at a point it started consolidating. So if you want to pay attention to this kind of thing, you need to also base your analysis on more than one indicators. You need to base it on more than one indicator, not just the EMA alone, but you need to understand how the EMA itself works. Without that, you will just be following all these cross, and you will be distracted. You'll be following cross, you'll be distracted. I always tell you guys something, that in your indicators are like a soldier. If you remember this, please let us know. Does anyone remember this?
Yes, I can remember.
Your indicators are like soldiers. Sure. And one thing you want to always do with your soldier is to always have them with you. If you send only one to the battlefield, it will be killed, and that will disturb you so much. So if I use only this EMA now, trying to enter market with the EMA, at this point where we have this ups down, cross, when it cross up, I enter long. When it cross down, I enter short. When it cross up, I enter long. When it cross down, I enter short. It will distract me. Even by the time, if I enter theory trade with that kind of strategy, by the time I started realizing that, oh, I'm supposed to have put support and resistance, trend line, I will not be able to work well with those indicators again, except if I'm able to calm myself down again, then come back to the market, reanalyze, and then follow up with whatever it is that I set up. So that's how it is. So now let me put what I intended to put the other time, 10 and 200. Oh, I'm supposed to change the color or make it bolder than that. Let me put yellow. Yes, yellow. Then the green, the 200 is white. Okay. White is not okay because of the trend line. Let me use that as green. Then the blue, I can use white for that, or red. I'm just changing the color so that you guys can see what I'm doing. I kind of believe the candles will be distracting also. I changed it from the red and green. That one also is affecting my psychology somehow. So using this, what I normally do with this is that, let me go on 1 hour. Okay, so what I do with this is that, originally the EMA 200 is a little bit distance. They say it's 200 days away from the candles. I don't know what they mean by that. So it's a little bit distant from the normal, what was it called? Let's say we are looking at this area where we have this consolidation. The market trend is already going down. Like we know that is we are in a downtrend. Then the market get to this side and you are like, what can you do? How do you want to find an entry? I'm trying to use this display something, but it's not working. Caution, bar replay can't be connected. Okay. And why? I'm trying to use the replay something, but it's not working. I think I will just avoid it. I don't know why it's not working. What is going on? The network. It's another chat.
I guess the network is
Yeah, it's the network. Yeah, I get. It's the network. Okay, I think we should just start working with this small area. Okay, let's assume we see the market like this coin was this is Ethereum, and there's an announcement that is going to be, there's this merge, Ethereum merge that is going to happen, and people expect the market to go up for that reason. But then Ethereum shows Pepe. It refused to go up the way we expect it to do. So the market goes down like this, goes up like this. After applying all those stuff, it started going down like this, and you're like, oh, that break below this area. Like there's this thing here. There's more of like, in fact, I can use rectangle for that area. Pick it from here. So there's some more like a support over there. When the market was still up there, this is more of like a support. You break it upside, bounce above it again, like break and retest. It's supposed to be going up from here, but then suddenly, I think there's this was the news that came up yesterday that US inflation figure rise up again. So that affects the market, including stock. Then it goes down instead of it to goes up. So this kick it downward, and the market goes below EMA 200 from that point. The EMA 10 that we have here, it's not doing, almost like it's not doing any job at all, because the same job it's doing here is the same job that the candle is doing for us. But I said this is psychological somehow. If you don't look at the psychological part of trading, it's going to be challenging. Please, let me quickly digress or something. Let me add the RSI. I want to show you why trading indicators is a little bit that is psychological. I want to relate it to another indicator for you to know. Look over here. We know that when the psychological part of indicators of RSI is that when the market goes down to this 30 oversold area, which is 30 level, there's belief that it will go up back to 70 overbought level. And at that overbought level, look at this, Where's the straight line? Vertical line. At that oversold area, you can see the market goes down. The market goes down at that oversold area. And it goes up. If you look at this, based on, if you use this with for your own analysis, like, okay, I'm using only RSI to enter trade, which is you shouldn't, but let's assume you do that. I'm using RSI alone to enter trade, then the market goes to oversold, you bought it from there. You will be in profit when it goes up like this. And what happens when it gets to this area? It goes down a little bit, the market consolidates, it goes up again, it's not ready to go down, it play few more time around this level. It play few more time. From this level, you will start selling, thinking it's going down. It will go down. But if you keep shorting the market from this level, you will keep losing, because the market, instead of the market to go down immediately, it doesn't. This is one of the reasons why you need to apply some other indicator to it. But the psychological part is that it's working. Yes, the market goes to oversold. You enter the market and it goes up. The market gets overbought now. It's supposed to go down on time. It doesn't. But it ended up doing that over here. But you, as a trader which doesn't apply some other indicator, some other techniques into its entry to find its entry point, you will have lose and get tired of trading. In fact, you will have asked yourself multiple times, why am I a trader from this level? But then when the market get down to your analysis later work out over here, you will now be like, is it not that my village people don't want me to become a trader, a successful trader? Maybe that is why anytime I analyze the market goes against me. When I'm about to give up, that is when it will now go in my favor. It's just the market playing with your psychology, because you also, you see it play, it's psychological, yes, but you are not playing along with it. We know, okay, for instance, this is more like saying if you are a sinner, you are going to hell. But you know, at the same time, you also need to ask yourself sometimes, once in a while, that is there really hell somewhere? Because nobody have even actually been there before and come back to tell us whether it's there. But on the other side, you need to be playing along with, okay, if I'm a sinner, I'm going to hell, then I should be a good person. So if you enter trade on oversold area, you will possibly or probably make profit. But then that doesn't mean that you should not think twice. This thing is oversold. It's at oversold. Yes, this is the period that's supposed to be having some. Maybe I should find the support. Maybe if I apply support and resistance, I'm going to see something. Then you are like, okay, if the market bounce up from that point, let me add my EMA. The EMA is also there. The market crossed down like this. Oh, it's crashed down. Then it started going up again. You can also do like this. Apply a trend line. When we have a break, then you can find your entry from with that. When we have a break, you can find your entry with that. But good, God so good, you have the EMA there. The market break above the EMA. I mean, the EMA cross upside. The EMA cross upside. There's this. Let's see. I think I'm seeing one support here. I'm seeing one support here. Yeah, the market cross upside, which is on this particular candle, you can't enter trade with it, because that is when the cross happen and then it jump up like this big jump. You can't enter trade with this. But applying this, finding this support area over here, you'll have, okay, there's support there. Then when the market go above the support area, you enter the market. You have seen this, the market is on oversold, then it's now going up. The cross happen here, you enter trade, you make profit, probably you get out when it gets over here. When it gets over here, let me see how many percent that is. From here, that's 5.2, let's say 5%. This 5% you are seeing over here, if you do that on future trade, you will be having more than that. But if you are doing it on spot, that means you'll be having 5% or more or less. So that is it. Using EMA is not just about, if you, it's like when someone give you a call, a trade to enter, and you don't reanalyze it yourself, you don't know what the person see, you might be like, oh, this thing is, enter the trade, you will not even know where to get out or get in. That same goes with EMA. When someone give you EMA, like this EMA I've used, and you don't understand how the EMA itself is correlate with the market, how it moves with the candles, then you will just be following rules that you don't know when the rules was made. Before, the rules I normally follow is that golden cross, dead cross. When there's dead cross, the market is going down. When there's golden cross, the market is going up. And then we have multiple golden cross that the market doesn't go up. We have multiple dead cross that the market ended up going back up. It happened many times. But how can you be on the safer side? Aside from looking at whatever cross that happened, you also need to apply some other indicator. You are sending a soldier to a war. They must always be there to protect one another. The cross happened over here. You also apply a trend line. I don't know, it's like I'm already having too much line on my screen, and all of them seems to look alike. I'm right? Are you getting it, or my lines are getting confusing now? Hello, is anyone there?
Yeah, we're there.
Okay. So we have the cross here, but before the cross, the market goes like this. Goes below your trend line. We draw the trend line now. Let me remove this yellow. The market goes below the trend line. Then there's this, I don't know, I think this is support. Yeah, it is. This support also, it breaks it downward. It breaks this trend line. Then we also have the cross there. That is a good sign. Then the market started going down. You have entered the trade somewhere, maybe. And I want to tell you something. When you see this kind of move, big move like this, don't get too confused about it. There's one thing you can actually do. We are on 1 hour time frame now. You can change to smaller time frame to see better. You can change to smaller time frame to see better. Probably this candle will probably be breakdown on 1 time frame. And it's not every time you'll be catching the trend. If a trend goes by you, just let it slide sometimes. So you can see what I'm talking about. We have the candle break into 2 here. So this is where the cross happened. The market goes below it over here. Goes below the trend line here. And that's supposed to be your confirmation. Even if you enter a trade with it, your stop loss will be up here. You will still in profit. If you enter a trade with this, your stop loss will be up here, then you still be in profit. All this is just a reverse and it can't get to you. And you ended up being in profit right now. So that is just it. It's not more than that. No matter which EMA you are adding, even if you had EMA 15, if you had 9, if you had 10, there was a time I was researching. When I was researching about all this EMA, I got to know one EMA like that. Let me see. It's like I still have it on my. It's not this. I still have it on my distance. I don't know if I have not tampered with the settings. It has been worked on. I've tampered with the settings, but we can still make use of it. Look at this. It has been worked on. It's more like a 1010. No, look at this. And the instruction on how to use this, the rules of using this is that when the red cross downward, in fact, I've changed the color. I've tampered with the color. The red should be down, and that means the market is going down. While the green is up, that means the market is going up. But there are multiple times that there's cross and nothing happened, there are multiple times that cross happened and nothing happened, the market did not go down or something, but it would have been better if I applied this with trend line. With trend line, then I will know where the market is heading to. The moment it crossed down below it, then I will know, okay, it's going down. But if I use only this, I will have get frustrated. It crossed down here now, the market doesn't go down, it crossed again, up down, like all this. Am I a baby? Am I a spoon? Why are you joking with me? Look at all this, up down, up down, up down. So there are many of them like that. You will keep finding new indicator, new what was it called? There are thousands of indicators out there. But when you apply any indicator on your screen, first of all, understand how it's have to do with what it have to do with your with the price movement. But let me tell you one thing: the best indicator ever is support and resistance. The best indicator ever is support and resistance. Once you understand how support and resistance work, you don't need to stress yourself too much. In fact, all this EMA we are talking about, you will be adding only one, maybe EMA 50 or 200 alone on your chart. That is how it is. Because that is what will show you where the market is going to. The moment it breaks this now, we already have support here, which the market already break. Then right now we can say it's going to this side. Because of this, we are seeing here, this area here, we can say it's going to this side, and we can also say, assume that it's going to this level. We can also assume it's going to this level. When the moment it breaks this, but this is too small, we are on 1 hour time frame. Yeah, we should just have it that way. Let me see if we can drag that to the, yeah. So that means it's even okay. So we can say it's coming here, and that means it's going to lose $50 more than that. Then the next thing is coming down here. If you are looking at bigger picture, then you can remove this and set alert at this level. So whenever the market is that point, you want to know what is going on in the market. So I hope it's clear. We have already spent all the time explaining all this. I hope you guys get it now.
Yeah.
Okay. So any question? Do we have any question to treat? Let's use 15 minutes.
Not too much for now.
Question and answer.
Yeah. The only thing left now is just for me to work on it and like practice everything that.
Yeah, you need to practice that. In fact, that's the best way. You just need to get to. If anybody share, I like seeing people's charts, and the reason why I like seeing people's charts is that I want to see what they have there that I don't have. When I see what they have and I don't have, it's not like I'm going to add it on my own chart. But once I understand how that thing works, it will not surprise me again. But whenever I see that whatever it is that they have on their chart, whenever I see it again, I have seen that thing, I know how to use it. But it doesn't mean that every indicator that you see on people's charts, people have a lot of secrets that they are not revealing to anybody. In this trading space, not only crypto space, in the trading what's it called, people advertise nonsense and they are suffering hidden, like they are suffering. Some people will lose today, lose tomorrow, lose multiple times. They will not share with anybody. They will come out with one indicator I sell for people, they make money. And the truth is that some people make money too. So it is a personal war, and for you to fight it successfully, you need to get better at some things. One of the things you need to get better at is to do some personal research about things you lay your hand on, like things you want to be using. You need to do some personal research about them. Sometimes just open the chart, don't enter trade. Just be looking at the market movements, how the candle is moving, what is really going on. The market is like over here now. We have this, we have this. The market break above it and it goes up like this. It come back down here. If I enter the trade here, that means I will lose over here. But if I enter here, I will make profit if I leave it up to this level. But will this always happen? Where have this kind of move happened before? Understanding the market structure also is very important. This is a good example of market structure. Look at this. The high, and we have higher low, we have higher high, we have higher low, higher high, higher low, higher high, lower low. Like this low over here is lower than this previous low, which make this lower low. And then we have this new high, which is not higher as this previous one. And what happened after that? If we draw a trend line like this over here, you can see that is a fail move. In fact, that place needs rectangle, not yeah. So you can see after the lower low, the next thing that will happen if the market is not in consolidation mode is to create another low, and at the break of this support level, it's going to create it will be heading down to the next support, which is, look at this over here. You can see how support and resistance is correlated with market structure. You can see this, it's come down to meet this previous one, and then look what started happening from there. We have a little bit couple of days consolidation. You can see that, and it keep coming back to that support before it later started creating higher high, higher low again. Higher high, higher low, then higher high, higher low, keep creating like that. Then now we started having lower low, lower high, coming down like that. So you need to understand market structure. Market structure, it means a lot, and it's going to really help you couple with support and resistance, understanding where the trend is going to. If you add up EMA with all these things, it's going to make trading
We have
easier for you.
and we have this low go below it. Then what happens next? Even as this market is going up here, some people will expand it, draw trend line over here. When they break it up, they will enter trade thinking it's going up. But this have already tell us something is wrong here. Because this go lower below this, and it means this market is still going more down, and it goes up a little bit, then go down more, goes up a little bit, go down more. So that's it. You need to understand those market structure, support and resistance. It's very important. It's not I'm not going to say it's easy. I mean, it's not simple. It's not easy, but it's simple. It's not going to be easy, but it's simple. How can it be simple for you? You need to work on it, because everything you need is out there. Just to create time and get familiar with them. That's just what it takes. It's not going to be easy, but it's simple. It's possible. It's possible. So that's it. Any question?
Yeah, not too much left. The only thing is just for us to go and work on.
Okay, so I think we need to call it a day then. So guys, so nice having you guys together tonight again. Good
Yeah,
night,
thanks
everyone.
very much. Yeah, good night.